dollar weakening of late with regards to, well, as a result of the US data coming out. What's going on there?
Correct. So we are seeing dollar weakness at the moment due to just market sentiments around the data that has been coming out, mostly coming out weaker than what market was expecting. We saw retail sales numbers yesterday, which increased by 0.2%, and market was anticipating a 0.4% increase. We also saw consumer confidence also falling as well. So all of that data is sort of then created an expectation in the market that rates are likely going to be cut in December when the Fed sits for their December meeting on December 10. So the prospects of a rate cut have now increased from about from 50% to 80% probability. So that has sort of weighed heavily on the dollar. As such, we see it weakening against a basket of currencies.
How are stocks reacting to the news of the US expectation to cut interest rates in December?
So they've reacted well. In times of low interest rates, investors then look at putting their money into higher yielding assets or riskier assets. So with the prospects of rate cuts in December, stocks have responded quite well. We've seen almost all the indices showing an uptick as well.
With a weakening performance of late, the rate cuts, if the US does cut rates anytime soon, what does that mean for the dollar?
So a rate cut will mean, a hit on the dollar. If the rates are higher than in the US, then the dollar performs well. But if we see a cut, then that will mean dollar weakness. But it's still trading at levels that are quite strong. And there's also other indicators that then come into play. But more than anything, I think the levels that we're seeing now have already been priced in by the market. So if we do see a rate cut in December, we're likely they're not going to see maybe a further dip because that has sort of been priced in and factored into the current prices that we are seeing.
Right. Toba, this is a business show, so I'd let you expand on how the equity is actually looking. The numbers will tell the story better.
All right. Maybe we can start with the currencies. So the Rand is doing quite well against all major currencies, 17.1525 against the dollar, up 0.42%, 22.57 against the pound, and 0.33% against the euro. As we've discussed, that is due to the weakening dollar. That is due to the price of gold increasing. We know that South Africa is an exporter of gold, so it's a commodity-backed economy. So with the increase in prices of commodities, then we tend to see the dollar performing quite well.
All right. Now, if the South African rand is getting stronger as the dollar weakens, is this short term, or this is actually a rally that could go on for longer than we anticipate?
So it's a trend that we've seen. I think you will recall for the past few months we've sort of been seeing the rand gaining a bit of strength up to the levels of 16.9495 that we saw when South Africa got its upgrade. So there's prospects of further strength. And ordinarily, when you look at past experiences, the rand would mostly consolidate and strengthen around December period. And then when the year then starts, we then start seeing a bit of weakening, if we can just use past data as an example. So in the short term, we are looking at a stronger rand, but that is, time will tell if that continues.
You touched earlier about the reports of the U.S. retail sector showing signs of weaknesses or pressures here and there. What does this really say about consumers and how maybe it could affect global retail companies, especially now that we're heading towards the festive season, people want to buy more?
So so it speaks to a consumer that is strained in terms of their spending. It speaks to job opportunities that are, shrinking. All those then mean that there's less disposable income for consumers to spend on luxuries, So, but of course, we are heading into a spending-heavy period where people are buying. But nonetheless, there is that strain on the consumer. So, with the rate cuts that are being that are expected, then that will sort of give relief. It is to give relief to the consumer to sort of have a bit more in their pocket to spend.
Right. In terms of commodities, how are things looking today?
Gold is doing quite well, as I've said, as it does in times of low interest rates. So with the expectation of of interest rate cuts in December, we've seen gold, gaining a bit of the strength that it had lost in the past few days. But we are at $4,160.26 per $0.23 per ounce, up 0.72%. So we expect gold to continue, gaining a bit of strength in these times of low interest rates. And then oil, on the other hand, is steady, I would say, a bit up today. But we saw oil hitting lows of about a 5-week low yesterday. It's currently trading at 64.62. That is after Russia announced that they are considering advancing the US-backed peace deal between them and Russia. So that's Ukraine. So that would then mean that there is increased supply in the market. If Russia then is no longer sentient as they are in the West, then their oil produce or supply will then be in the market again.
Right.
So that is sort of weighed on the price of oil, as well as just expected increased volumes in 2026 that are not countered by possibility of increased demand as we would. But that is just how the market is viewing the price of oil going into the new year. We've seen it weighing heavily on the price of oil in yesterday's session.
Right. What's your outlook of equities?
So equities are doing well. In the US, I think we've spoken about what's driving that, which is the expectation of an interest rate cut. In the UK, we have the budget that the Minister of Finance is presenting today. That is expected to be quite, tax-heavy. Industries like banking and mining are doing quite well in the FTSE bracket. Mining, because of the price of gold that is shot up, and in banking in terms of reports that are coming out of tax relief from the budget that is expected to be presented.
All right, Toba, thank you very much for your insights. That was Toba Kamete, who is the Treasury Sales Manager at Nedbank, sharing insights on what is moving markets today. This has been another weekly broadcast of Nedbank Business Watch right here on Eswatini TV. Thank you so much for tuning in. Until the next time, bye.
Make better money choices. Choose a bank that takes your money seriously. Business Watch was brought to you by Nedbank.